Piyush Garg, CIO at ICICI Securities, joins us now for his take on the markets. Piyush, hi, afternoon. How would you describe this consolidating / profit-taking phase of the market? Does it seem like this could get corrective in nature in the run-up to the election result?
Yeah, hi, good afternoon. No, I'm not sure actually. I would not feel that there could be more than possibly another 2-3% correction on the Nifty, so possibly somewhere closer to 6,600 or so. I think that is where the market would form a low at least till the third week of May or before the election outcome.
Piyush, if I just look at market internals, which is the Nifty Wix, daily volumes, delivery-based patterns, none of the market internals are encouraging. In fact, based on market internals, it is easy to conclude that there is no real underlying interest in this market.
Yeah, Nikunj, if you also see the numbers from, let's say, FIIs, I think in the last 1 month or so, at least starting this fiscal year, I think they have hardly put in about 5,500 or so in the cash market, and there is commensurate selling in the stock futures also, or to the equal extent. Also, if you see on the debt side, I think there is a withdrawal of close to $2 billion from FIIs on the debt side as well. So I think overall, and domestic money is definitely not coming into the market in any big way. Mutual funds and etc. or the DIA numbers are pretty much on the negative side almost on a daily basis except 1 or 2 days. So I think from an institutional side, there is no major buying that is happening in the market. And I think that is what market is also tending to exhibit, or what parameters you chose to describe. I think it is fitting into this.
Piyush, the metals pack seems to be really taking it on the chin on account of, again, slowdown fears in China now resurfacing. Would you tell investors and clients right now to stay away from metals pack, and would that be a medium-term call, or does it seem like this is just a near-term aberration and metals would again bounce back?
See, metals is a fundamental sell. I think China is clearly slowing down. They are having huge problems, shadow banking, etc., etc. I think we all have been hearing on this front for a long time now. Second thing is, dollar seems to be gaining strength again. I think last 1 or 2 months, especially if this Ukraine crisis, I think tends to increase from the current levels. Dollar is gaining strength, and in such an environment, I don't think fundamentally metals are any reason to buy. So especially in today's market, I would say there are better bets in terms of taking a call on the market through sectors like possibly banking, or let's say even IT to some extent, or let's say capital goods, etc. I think these are the sectors where you could make a better return than worrying about the global cyclical, something like metal. So I would say metal is a clear avoid at this juncture.
Piyush, many experts are of the view that the absolute mean revision in cyclicals is over. 3 months ago, cyclicals were beaten down, they were on the butcher block, but that's not the story. An average cyclical stock, irrespective of the pedigree, is up 40 to 50% from the recent lows. Do you think now cyclicals pretty much would be market performers, not market outperformers?
Yeah, I would not put it this way, Nikunj. I think if you see what has happened in the market in the last 3 months, from 6,000 or 6,100 to let's say 6,800 Nifty, so pretty much it has been led by cyclicals. And if you see the relative performance of cyclicals versus let's say IT, or let's say versus FMCG, etc., then I think cyclicals have outperformed 50-60% to the versus these defensive sectors. So I think it's a clear call on the market from here. In case one believes in this huge economic promise ahead of us after the NDA comes to power, then obviously I think cyclicals will continue to do well, and they are a higher beta play. And in case market is looking to move up, the only way I think to make higher returns in this market is to buy cyclicals. I don't think without cyclicals you can make higher return in the market. In case the market is expected to move up and you are willing to bet that after NDA comes, every kind of a problem that is there in our country is going to get solved.
Some would argue that that is absolute positive thinking, and maybe markets may not really follow the consensus. I mean, do you think there is misplaced optimism in believing that even if we get Modi as the next Prime Minister, things will turn around?
See, it's a huge economic promise, Nikunj, I think. See, I would put market this way. So we are trading closer to 15.5 forward P. Okay, now P's can expand only under 2 circumstances. One growth pickup happens, which doesn't seem to be the case. You ask any economist, no one is projecting more than 5.5% GDP growth rate for the next fiscal year. So I don't think earning growth rate is going to be that high for you to expand PE. Second is PEs could expand if interest rates fall. That also doesn't seem to be the case. So any rise in markets, any rise in the market from these levels would mean that the PE of the market is going to expand, which to my mind I think may not be sustainable. Now obviously if you take a 2-year view and feel that yes, once the policy is in place, then things will start moving, spending will happen, private consumption is in doldrums, all these things will recover. It is a possibility that you would make 30% kind of a return from the current levels in the next 18-20 months. But argument against this is that anyway if you put money in FMPs or bank deposits, in the next 2 years you will anyway make 20% return. So it's not that the stock market is going to give you very phenomenal returns in the next 1 or 2 years period. So I would say that the risks are pretty much balanced at this juncture. One has to take a call possibly for a 3 or a 5-year perspective that things are going to get rosy year by year for the next 4 years, and then only I think one can make significantly higher returns from this market. Otherwise I don't think at this juncture it makes tremendous sense to put a lot of money into equity markets.